All right, so 5.2, periodic inventory purchase returns and allowances, okay? Of course, if we can make purchases, we also have to assume we can also make some returns and allowances. So when we buy things from our vendors, oftentimes things can happen to the point where it forces us to have to request for a refund or to return the product, right? Because we are unsatisfied. Maybe this isn't the product we purchased, so on and so forth. Whatever reasons that you have, whether maybe the items were damaged during shipping, it's going to be pretty straightforward that you're going to be demanding a refund or to return the product, okay? And that's very valid because, again, the idea of this is you can't sell broken items to your customers, right? And it's not fair to you that you bought something and it was broken. So again, this is where the reasons that could be for you to return a product. It could also be too if you end up having another merchandiser, right, or another manufacturing company that sells the same product and it could be significant cheaper. That could be a reason why you want to return the products, because again, the goal here is to maximize savings, right, to maximize profit. So if it's cheaper, of course you can go for that. And last one could be customer service itself, right? If this company is just proving to you to just be not giving you the best service, or they're just sending you left and right the wrong items, then you might want to consider not dealing with this company and search for another one. Okay, so there are many reasons why you would want to return a product for these various reasons. Now, of course, for a manufacturing type of company, they are wanting to keep you in business, right? They want to keep you because you're probably one of their companies that buy in bulk, right? You make up a majority of their sales by, again, getting the product, right, and distributing the product out to to the public, right? It's a platform that you're using to distribute from one place to another. So this retail store, or us, as the person who's buying and purchasing these items, we make a huge part of their sales because we buy in large quantities. So with that being said, a lot of times vendors will do anything to keep your business because of the idea that you are purchasing large quantities and you are representing their brand and their company. So in this case, right, they will give you discounted price. They can give you special offers, unlimited amount of returns, okay, and even money back guarantee, okay? Now, in this case, when we do end up returning a few things, you do need to note that there are a few things that you can and cannot return. So let's take for this example here, let's purchase this item first and then see what happens when we want to return them, okay? So in this case, on January 1st, you end up purchasing 100 coffee mugs on an account from Cuppies Co. And once again, it costs you $1.25 with the freight of $100. And now let's try to record this transaction. So in this case, right, we learned how to record a purchase, right? Purchase expense, freight expense, and accounts payable because we owe them on an account. Okay. So in this case, we wrote it down that we owe them $225. Okay. Now let's see for the first example here, when we receive the shipment of items, right? Then on January 5th, we looked through the inventory and we found that out of those items, right, 10 of the coffee mugs were broken, right? You can't sell broken coffee mugs and you paid for broken coffee mugs. Maybe it happened due to shipment. So again, you end up requesting for a full refund on those broken items. And of course, the vendor grants you your full refund. So let's record this transaction. Now, as I've mentioned, right, we're going to be introducing to another contra account called purchase returns and allowances. So again, this account decreases purchase expense, right? So we're going to create a contra account called purchase returns and allowance. And what we're going to do here is we're only getting a refund off of the products that we are refunding. Okay, so in this case, 10 of those coffee mugs, right? In this case, right, 10 of those coffee mugs cost me $1.25, so that's exactly what I'm going to do. I'm going to calculate what 10 times $1.25 is, and normally they will give you either a credit. In this case, we never paid, so it's just going to end up reducing the liability that we owe, okay, for $12.50, okay? What about shipping? Again, you cannot return or refund shipping because this is what you paid to get those items to your store. Now that those items are already at your store, you can't expect the vendor to cover the cost for 10 of those coffee mugs. They might not even ask you to ship those items back because, again, they're broken. They probably don't want those items back. So in this case, they're not going to refund you for shipping because that was your responsibility because you wanted the cups to your store, okay? That had nothing to do with the vendor itself, okay? So in their case, you can only refund the actual selling price of the purchase price of the items that you bought, okay? All right, any questions here? No? Okay. So let's talk about what the difference between a return and an allowance is, okay? Because in this case, right, I'm going to show you this example here where we received the items, right? But on January 5th, when we actually looked at these items, we found that 25 of those coffee mugs were the wrong size, okay? They ended up shipping you the extra large cups instead of the regular size cups, okay? Now, oftentimes when a vendor does do this, what they kindly have to do is either give you two options, either give you your full refund, or they can renegotiate with you and say, well, I already shipped you these coffee mugs. They're in good condition, right? You can still potentially sell those coffee mugs if there's nothing wrong with them. But because it was my mistake for sending you the wrong order, I'll give you an additional discount off of those items because it was my mistake. I sent you the wrong order, okay? And you have the option to either accept that 15% discount or say, no, I just want a full refund. I don't care. I want the regular sized cups. Then that's where you're going to have to come into whether you agree to take the discount because it's true, right? If you sell regular size cups, what's wrong with selling extra large cups? Nothing. But the vendor usually should give you or offer you a discount to basically reprimand their mistake. So in this case, the vendor offers you a 20% discount and you accept it. Okay? Now, is this 20%? Where is it applicable? Okay? In this case, can I apply it on all 100 coffee mugs? No, because out of the 100 coffee mugs, 75% of the order was correct. So no, you cannot take a discount off of things that were correct. So in this case, this 20% discount is only applied for the 25 cups that you were attempting to return. Okay? So in this case, that's what I have to calculate is, well, how do I do a return? How do I get money back for this? Or how do I apply this 20% discount? Same thing, since a return and allowances, they technically do the same thing. In other companies, yes, you can have a separate one for returns and then a separate one for allowances. But the difference here is a return is where you're refunding the full amount of the money. An allowance is where you're only getting a portion of the money back. So in this case, I am still paying for those coffee mugs, but I'm getting it discounted because they made a mistake and sent me the wrong product. They cannot charge me full price for the products that I didn't want, right? And that makes no sense, right? Why would you pay for a product you don't want? So that's why they would try to, reprimand their mistake by offering you additional discount off of those items that you have purchased because there's nothing wrong with the inventory, right? You could still sell it. Okay? So in this case, that's exactly what I had to do. I'm going to use the purchase returns and allowances account, the same contra account, because returns and allowances kind of are more or less, they function the same. Okay? Now in this case, I can only discount the 25 mugs that I purchased. But in this case, because I've already purchased them, right, and I owe them on an account, but I never paid, so what this discount does is it goes against what I owe them, okay? So I can only do it for 25 mugs. So 25 mugs times $1.25 gives me a total of $31.25. I can only discount this amount here. So in this case, I can only take 20% off of $31.25 to get me a total of $6.25. So therefore, that's the money that I'm going to take off the amount that I owe, and that's the money that's going to be going under my purchase returns and allowances. Okay? All right? Any questions here? No. Okay. So chapter review, right? We talked about making purchases. We talked about discounts. Now this chapter, section of the chapter is learning about what happens when we return items, okay? So in this case, our main focus is that we have to create a contra account called purchase returns and allowances, right? And that's going to be our contra account, which is going to be our credit. And what it's going to do is going to reduce whether you owe it on an account or if you paid with cash, you're going to get your cash back. So in this case, now a return is a full refund. So that means you're going to get to calculate how much money you're going to actually get back, but it's only based on the purchase price itself. An allowance, right, is when you get a portion of the money back, right? Usually they determine it as a discount off of those items, okay? And so on and so forth. All right, so let's go ahead and do the chapter 5.2 exercise, okay? All right. So here, number one, we're going to journalize. Assume that all purchases were made on an account, okay? So let's take a look here. On April 5th, right, we purchased 1,000 units for $5 each with the freight costing $100. So, April 5th, how am I going to journalize this?
Accounts payable.
Accounts payable is going to be what you paid for. We got to recognize our purchase expense first because the rule is debits first, credits last. But again, for the sake of this class, we're practicing, so good. At least you can if you're able to recognize what accounts you're going to be using, that's good enough. Okay? So purchase expense, freight expense. So how much is my purchase going to be? $5,000. My freight? 100. And last but not least, you should owe a total of $5,100 with, okay, and you can put your description here that you purchased 1,000 units at $5 each. Okay. Now, on April 7, we end up returning 200 damaged units for a full refund. Okay. So how do I journalize that? Accounts payable. Good. What else?
Purchase, return, and allowance.
Good. Purchase returns and allowance. Okay. So in this case, how many units did I return?
200.
And at what original purchase price did I purchase each item for? How much did it cost me per item?
5.
It cost you $5. So 5 times 200, how much is that going to be?
1,200.
1,000, right? 200 times 5 is 1,000. Good. So that's how much money you're getting back is $1,000. Okay? And then I need to put a description here that I returned 200 units at $5 each, full refund. Okay? All right, so then on April 10, we end up purchasing another batch of inventory, right? We purchased 750 units at $5.75 each with the freight of $75. So I need to journalize that I made another purchase of inventory. Okay, so April 10. How do I journalize that I purchased inventory?
Purchase expense.
Purchase expense, freight expense, accounts payable. Good. So if I bought 750 units at $5.75 each, what is my total purchase price?
What was it, 575?
$5.75, yes.
5,812 with 50.
No, that's too high.
Is it 4,312
$4,312
and 50 cents?
and 50 cents. Okay. The freight was $75. Okay. So then my grand total should be 4,387.50. Okay. So then I need to make my note here saying that I purchased 750 units at $5.75 each. Okay. Now, here, April 15 rolls around. April 15, and I end up returning 50 of those broken units due to shipping for a full refund. Now, assuming this information happened on April 15, right? Am I referring to the first batch of inventory that I bought, or am I referring to my second batch of inventory that I purchased?
Second?
Yes, because in this case, right, the assumption and rules should apply, right? This could be true for most companies, but this is a definitely rule of thumb here. When you receive your purchases of inventory, you need to open up all the boxes and check every single item that is there. Yes, 1,000 items is a lot, but the thing about this is because you want to make sure that are all of these inventory items available for you to go ahead and sell. It would, again, if you find out 2 days later when you open up all the boxes after selling all these items, right? You're gonna come into you're gonna come into a very bad situation if you thought you had 1,000 items, but 200 of them would end up being broken, right? Then you're trying to sell, maybe you're selling your 800th and one cup, right? You can't sell that one cup because you don't have a good one available. So the idea here is general rule of thumb is when you make a purchase of your inventory, you need to do your duty and open up all the boxes and count to make sure. Now, are you obligated to make the refund right away? Absolutely not. You can wait a couple days because again, but the longer that you wait, then again, the assumption is that's kind of weird. That why would you wait till the end of the month to return something that you bought from the very first batch, which was April 5th, right? So in this case, right, that's the assumption. So since I made this new purchase of inventory for the 200 units, or 750 units, I'm going to open the box and find that 50 of them were broken. And I'm going to say, you know what, 5 days later, I'll go ahead and just request the vendor to just refund it just because maybe you were busy that week. I don't know. Okay. So in this case, 5 days later, I'm going to return 50 of those broken mugs due to shipment for a full refund. Okay. So in this case, how am I going to record this refund for April 15?
Accounts payable
Good. And
and purchase returns.
good.
And allowance?
Mm-hmm.
Or just return?
Either or, they do function the same way. So if your company, right, has a purchase returns account and then has a purchase allowance account, then so be it. But in this case, I'm not going to separate them. I'm just going to combine them together because they function the same way. They reduce the purchase expense and they are more or less in the same category. One of them is getting an actual amount, like the full amount back. The other one is just getting a portion of the money back. Right? So in this case, how much is going to be my total purchase returns? Because if I am returning 50 of those broken mugs, right, how much did it cost me when I made my purchase of inventory on April 10? How much did each cup cost me? $5.75 times 50 because I'm returning them 50. So how much am I actually getting back?
$287.50.
$287.50. Okay. And then I'm going to make a note here. Returned 50 units at $5.75 each, full refund. Okay. So then let's see what happened next. Then April 20th rolls around. We purchased 200 units, okay, at $6 each. Freight cost was $20. So once again, how do I record a purchase?
Purchase expense.
Okay.
It would be 1,200.
purchase 200 units at $6 each. Okay, good. All right, now that we finished our page here, what I'm going to do is I need to add a couple more lines here so then I can continue on with my journal. Okay, so then on April 22nd, 25 of those units were the wrong color, okay? But we were willing to accept a 20% discount, okay? So in this case, 25 of those units were the wrong color. However, maybe the vendor was like, there's nothing wrong with them. You could still sell them. Maybe they could be a special offer, special limited edition item. I don't know, okay? They're still good quality. They're still in good, you know, you can still sell them. So in this case, we'll give you 20% off to say, I'm sorry, I sent you the wrong items, and you're willing to accept it. So in this case, how do I record this allowance?
Accounts payable,
Accounts payable, good. Accounts payable, so it's April 22nd. We're going to get a portion of their money back. Okay, and what else?
and the purchase, the returns, and allowance.
Excellent, right? Purchase returns and allowance is going to be very good. Purchase returns and allowance. Right? Now, in this case, 25 of those units were the wrong color, and I can only take a 20% discount off of these 25 units. So in this case, how do I calculate this?
Is it 25 times $6?
25 times $6, good.
$150.
Okay, but that's giving a full refund. I can only give 20% off.
So 150 times 20%,
Correct.
which is $30.
$30 is what I'm going to get a refund for. So in this case, $30. Okay, and my note is going to be, once again, now you could say return, but in this case, I didn't really return. I got an allowance, okay, for 25 units at $6 each for 20% discount. Okay. Right, and then last but not least, we have here for April 25th, we end up purchasing 500 units at $6.25 each with a freight of $50. So in this case, April 25th, right, we purchased 500 units at $6.25 each with a freight of $50. So how much is my purchase expense?
$3,125.
Okay, plus 50. Right, 3,175. Okay, excellent. Any questions in regards to chapter 5.2?
No.
All right, good.